Bitcoin represents one of the most trusted assets in the world because we're living in a digital age where AI and cybersecurity threats have really undermined trust in both dealing with each other, but also in financial institutions. The Bitcoin blockchain is still the most secure ledger in the world. It has not had a single hack in its 14-year history. And that means the price of Bitcoin represents the value of trust in a trustless world.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Join Tom Lee as he dives into Bitcoin, the future of crypto, and why he believes Trump is one of the most market-friendly presidents ever. Let's catch him to uncover more intriguing insights.
Trump is one of the most market-friendly presidents ever, meaning he's going to focus very much on and rate his presidency based on how the stock market does. And so that's good for investors because if he introduces policies that worry markets, like deficits too big or tariffs too aggressive, he'll see it in the stock prices. I think the safest way to navigate this from our perspective is to focus on things that we all agree he'll pursue. Deregulation, pro-business, and market-friendly, which means financials and small caps. But he does want to make the government more efficient and even do tariffs. So I think multinationals are a little more challenging, and industrials like defense would be challenging, and of course negative for healthcare and energy. From a bond market perspective, I think interest rates are initially rising because of concerns about deficit spending. But again, that's negative for stocks. So I don't think that Trump nor his advisors want interest rates to go up dramatically. So I don't think interest rates are going to be the reason stocks underperform. And then from a crypto perspective, it's clear to me that he's pursuing a very pro-digital assets platform. I mean, he ran on the idea of Bitcoin potentially becoming a reserve asset. Almost all of his key advisors are large owners of Bitcoin. So I think Bitcoin is going to be very central to the White House initiatives over the next 4 years, which of course is positive for Bitcoin. We've been recommending Bitcoin for 8 or 9 years, and it remains, in our view, a core asset. If we look at the price performance of Bitcoin, and we do have to look at price because it's a measure of its trust, it's following very closely previous halving cycles, and that implies Bitcoin should be around 100 to 150,000 in the near term, but could easily get close to 500,000 in 5 years. At 500,000 per Bitcoin, it would still be less than the value of gold today. And I think Bitcoin will surpass the value of gold, which would put the value much closer to $1 million per Bitcoin.
Bitcoin's rise to prominence has taken an intriguing political turn as the cryptocurrency increasingly aligns itself with the Trump administration. In mid-December, Eric Trump attended a Bitcoin conference in Abu Dhabi, where crypto enthusiasts gathered in a lively, almost surreal atmosphere. Participants dressed in costumes and posed with life-size cutouts of Donald Trump and Elon Musk, celebrating both the cryptocurrency revolution and its newfound political backing. During the event, Eric Trump declared that his father would be the Bitcoin president, promising to advance the industry's interest in the United States. This message electrified the crowd, who saw it as a validation of their vision for cryptocurrency's role in reshaping the financial system. It also highlighted the Trump family's commitment to fostering the growth of digital assets, reflected in key appointments and regulatory shifts favorable to the industry. The timing is remarkable. Bitcoin recently hit the $100,000 milestone, a far cry from its $16,000 valuation during the crypto winter 2 years ago. Trump's embrace of crypto has undoubtedly fueled this surge, with his election victory acting as a major catalyst. On election night, Bitcoin shattered its all-time high as states began to fall in Trump's favor, further solidifying the bond between the political and financial worlds. Now, with a pro-crypto administration in power, the industry is poised to push for regulatory reforms and broader adoption. The intersection of Bitcoin's rising value and its political alignment marks a pivotal moment, setting the stage for a transformative era in digital finance.
The Treasury Secretary is a very important role from a market's perspective because the Treasury Secretary plays a role in not only issuance, so really the path of interest rates, but also foreign currencies, what the dollar does, and intervention during emergencies. We all know during the GFC, Paulson really was one of the key people. He was Treasury Secretary at the time that saved the economy. So it's a very important role. When we look at the 3 or 4 candidates that are leading, from Bessent to Lutnick to Warsh and Mark Rowan, all 4 will be very sophisticated investors. So I don't think markets are going to have problems with whoever they end up picking, but we don't know what criteria Trump is going to use. Is it going to be something based on market acceptance, and he can follow the betting markets to see where that stands? Or is it going to be something superficial? Because as you know, he didn't necessarily approve of Janet Yellen because he thought she was too short to be Fed chair. I generally don't try to advise people on allocation because how much someone puts into bonds, and bonds are less risky, depends on their tolerance for risk and their age, and also how much money is in the stock market versus their total net worth. So those are 3 variables that I don't know, and that's why we don't usually advise an allocation mix. But I can say that we've recommended initially, when we first wrote about Bitcoin, that investors put 1% into Bitcoin. And if they didn't sell that Bitcoin, even with the stock market gains, it's now 40% of their portfolio. And if a second suggestion was 0.5% into Bitcoin and 0.5% into Ethereum, and that is now 80% if they didn't rebalance. Today, we're recommending at least 2 to 5% into Bitcoin, but that is as a commodity or alternative exposure, because if they invest 2 to 5% of their money and somehow crypto goes to zero, they didn't lose everything. But if Bitcoin reaches some of the targets we expect, then Bitcoin could end up becoming 50% of their portfolio again.
Peter Brand, a seasoned market veteran with over 50 years of trading experience, has issued a stark warning to Bitcoin traders about the potential for a sharp correction. He cautions that many could suffer significant losses if BTC faces a 50% drop, a scenario he believes is plausible given the cryptocurrency's volatile nature. Bitcoin, which has seen an astronomical rise from $0.07 in 2010 to nearly $98,000 today, might not sustain its meteoric growth indefinitely, according to Brand. He highlighted that such a correction would bring Bitcoin's value down to approximately $49,800, a reality many traders are ill-prepared for. Brand stressed that over-leveraged positions and unrealistic expectations leave participants vulnerable to being wrecked in the face of severe market downturns. While he did not predict an imminent collapse, he urged traders to incorporate risk management strategies. Despite his warnings, Brand remains bullish on Bitcoin midterm, envisioning a potential rise to $234,000 if favorable conditions align. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.